Hey, it's Lewis here and welcome back to our channel, and in today's video we're going to be analysing Rio Tinto stock. We'll be using fundamental analysis via TIKR terminal, and then I'll set the cash flows into the DCF and we'll come to a fair value of their stock. Let's get straight into it. So who are Rio Tinto? So Rio Tinto Corporation, or Rio Tinto Group, is an Anglo-Australian multinational company and it's the world's second largest metals and mining corporation behind BHP. I've spoken about Rio Tinto many times on this channel, so you can look at my previous videos for a full description. But the company itself is listed on the London Stock Exchange and it's a component of the FTSE 100 index. It's also a member of the ASX, so Australian Securities Exchange, it's a component of the ASX 200. That was a mouthful. And also they're listed in America as well with ADRs on the New York Stock Exchange. Second biggest miner in the world. Lots going on with them. Let's get into the sales anyway. Now let's have a look at the sales for Rio Tinto and sales for business for 2021. So iron ore made up 62%, aluminium made up 20%, copper 12%, minerals 10%. Predominantly iron ore is what they sell. Miners sell anyway. So sales per region: China, 57% of sales come from China, the US 13%, Asia excluding China and Japan 9%, Japan 8%, and you can have a look at the rest yourself. Quite minimal, to be honest. So basically most of the sales come from China, a small amount from America, then the rest of the world, to summarise. Now let's have a look at the financials for Rio Tinto via TIKR terminal, and as always 5 years worth of data, and we'll start with the income statement. So the last 5 years revenue has increased, which is decent. Before this it was relatively flat. Not much of an increase, let's be honest. Can't give them too much credit. 2021 really big increase there in revenue, which has been great for Rio Tinto. Now let's have a look at profits and net income to the company. It's gone up massively over the past 5 years. Very profitable business when things are going well for them. You have to give them that. So shares outstanding wise, shares have decreased a very slight amount, which is good for the shareholders if the shares were bought back cheap. Fingers crossed we did that, because that would have been a good capital allocation decision. Cash on hand has increased over the past 5 years. We like that. Long-term debt, let's have a quick nosy. So that's decreased over the past 5 years. Really good stuff. Return earnings have increased as well. So let's go to the balance sheet. Cash flow statement now. So cash from operations and capex, these two figures combined make free cash flow. Free cash flow is the most important figure in valuing the company. It determines the value of the stock when you put it into your DCF. So very key figure. Companies do a lot of things with free cash flow. They can pay back debt, dividends, reinvest into the business, share buybacks, and I think I forgot one there, but they can basically allocate the cash for shareholders. But over the past 5 years, they have increased the free cash flow a decent amount. Really good stuff. Free cash flow positive as well all the way through, so no complaints. Repaying back debt, paying dividends, a few special dividends as well, which is a really good sign. Special dividend is if the company's got, say, a fair bit of cash on hand and want to reward shareholders, they'll just allocate it to shareholders, not as the usual dividend. So that's a good sign for shareholders of Rio Tinto. Let's go to ratios now, and I like ratios because it tells a bit more of a story of the financials. So return on capital, is pretty high for the business. Even on a slower year, it's like 18%, 19%, so not too bad. And a blockbuster 2021 made the return on capital 40%, which is awesome. Really good stuff. Gross profit margin as well, you can tell it's because we've had a couple of good years, it's grown massively. Net income margin is remained pretty damn high, to be honest. 33% is very high. It's like a tech company margins, that. Great year for commodities overall, so hence why they're doing well. But even on the slower years, still making decent profits. I bet if you go back a bit, this is where it gets interesting, because you look at the previous 5 years, it doesn't look so good, does it? So clearly the past 5 years have been good for commodities, but you've got to bear that in mind when investing in these companies. Very cyclical, so you've got to bear it in mind. Maybe a 10-year analysis is more important, would make a lot more sense for Rio Tinto rather than a 5. because I'm kind of showing the good years here. I need to show the bad years. Maybe the next analysis I do, I will show that a bit more. But yeah, I'll stop rambling. Current ratio is way above 1, which is epic. Look at dividend yield, because the special dividend, they've got a very high dividend yield. This won't stay like this forever, but pretty decent anyway. Cash conversion cycle is low, which is really good. Total debt to capital, 18%. Epic stuff, not much debt in the business. I guess a mining company can't have much debt because, let's say commodities fall off a cliff and they start making losses. We don't want a lot of debt around when making losses because we wouldn't survive, simple as that. But yeah, that's it for the financials on TIKR. If you are interested in using TIKR Terminal, head into the description down below and use my link and sign up. Great bit of kit, awesome bit of software to analyse companies. Use the global screener to find your own companies to analyse. Analyse estimates are on here, company transcripts from earnings calls. You've got the lot. Really, really good platform. So yeah, head over to TIKR Terminal and try it out.
If you are enjoying today's video, then why don't you book in a one-to-one coaching session with myself? In these sessions, you will learn how to analyse a company using fundamental analysis. As well as this, you will learn how to value a company using a DCF model. Value investing is the art of buying stocks which trade at a significant discount to intrinsic value. Value investors like myself achieve this by looking for companies on cheap valuation metrics, typically lower multiples of their profits, assets, and cash flow as well, for reasons which are not justified over the long term. Billionaire value investors such as Warren Buffett, Charlie Munger, and Joel Greenblatt have all used these timeless concepts to beat the market over the long term. No financial advice will be given on these calls, financial statement analysis and business valuation, education only. I will see you
now
there.
Let's take a look at the generating impact stats for Rio Tinto. Generating impact is that way you can research stocks in 2 minutes. They cover over 15,000 stocks and ETFs. Download the app free today on the App Store and Google Play. So we'll start with the 5 main metrics I like to look at for generating impact. So the value metric is looking good, ranking pretty high, but then this is where it gets really interesting. So the quality metric is looking very good. One of the highest quality stocks on the platform. You can see it's got the shield around it, so it confirms this as well. Dividend wise, it's looking very good as well. Maybe because of the blockbuster 2020 and 21 they've had, it's meant the dividend has been a lot higher than usual. But as shareholders, we will take that. Past growth has been good. Makes sense. 2020, 21 have been good. We've seen from the financial statement. But then future growth is looking very bad. It's looking like the good years they've had, it's going to fall off a bit. And that's totally expected as Rio Tinto shareholders. Do not expect 42% revenue growth year on year. It's not Tesla, so it's not going to happen. But yeah, even if revenue does decrease, it's not necessarily a bad thing. You just have to put it into your analysis and expect that. But yeah, some interesting insights there from Generating Impact. Now let's take a look at my analysis checklist for Rio Tinto. And yes, let's start with my first pillar. So profitable, high returns on capital using low leverage. So the company itself, return on capital has been 25% 5-year average, so really, really good stuff, very high for the business. Gross profit margin doesn't quite meet 40%, but it's near enough there, a bit harsh on them to be fair. Net profit margin, no, absolutely smashes out of the park, 26%. Free cash flow margin as well at 20% is really, really good. Current ratio, so we've got plenty of current assets to cover our current liabilities, short-term obligations are covered. Cash conversion cycle is way below 60, so the cash runs through the business from purchase to sale very, very quick. Really good stuff. Debt to capital wise, it's looking like there's not much debt on the balance sheet. Long-term debt wise, total debt to capital wise, 18% is very, very low for a business. Can't beat it. Proven ability to grow, all green, so revenue growth, net income growth, return earnings growth, and free cash flow growth. Bearing in mind, we've had a blockbuster few years, so these metrics will be green, so that does make sense, doesn't it? But maybe next year's analysis, all these will be red. We will see. Great capital allocation decisions are important for a business, and that's why I look at it in my analysis. So long-term debt repayment, we've issued a small amount of debt, probably not to worry about, but it's a red nevertheless. Decreasing share count, decreased shares over the past 5 years. Growing the dividend and good acquisitions, just to check to see if they're not writing off too much in terms of goodwill and asset write-downs. And yeah, they've made a gain on asset sales versus asset write-downs and goodwill impairment, so we'll give them a green tick for that. Quality score 87% overall, so not too shabby. Buy at a fair price, so currently P ratio of 4 and a price free cash flow of 5. Hold up a minute, this stock is not a secret value investment. It's simply because the market understands that the earnings of his business are going to decrease, and the stock's being priced accordingly. So when the new earnings come out for, say, 2022, and the P/E ratio will adjust to a more reasonable figure, it's not as cheap as it seems to be. DCF valuation, 10% return. We're looking at a share price of £55 per share. This is in pence, by the way. We'll see in the next slide from a DCF valuation. But yeah, from a current share price of £48 per share, UK shares, 16% uplift to get to your 10% return. So looking interesting. DCF valuation now. So yeah, Rio Tinto's financials are all done in US dollars, which is fair enough if they report the earnings in US dollars. But I've got the fair value of the company in for the UK shares. So yeah, £55 per share. From the current share price, yeah, it's looking very interesting, isn't it? Yeah, it's been below 55 for a good few months now, so it's looking interesting. I mean, obviously the lower the better, the lower valuation the better, hey, but I mean, it's looking decent. You've got a solid dividend. As long as we remain profitable, they're going to be paying dividends. We've got the cash in the account, so I like Rio Tinto personally, hence why I've done quite a few videos on them. Very simple business. They mine stuff, they sell it, they make profit and cash flow. They use that cash flow to buy back shares and mostly pay dividends to our shareholders. Hence, simple business, I like it. Not much to say apart from that. If you'd like a reasonable return, it's looking pretty decent. Do some analysis yourself and see if you agree. But yeah, very interesting company, Rio Tinto, for sure.
So there we have it. That was my full stock analysis for Rio Tinto. If you enjoyed today's video, then please subscribe to the channel. Thank you very much for watching. I will see you next time.
Thank you for watching. As always, it would be amazing if you could like, comment and subscribe to the channel if you enjoyed this video. I will see you in the next one. However, you can check out some of these videos